what is there a window to where it has to be? Is this like you buy the farm, you close on it, and the next week you start this process, or do you have a year? Do you have 2 years, 3 years?
I really like to try to get on this as fast as possible because soil is such a changing thing. And the longer you wait to do this, the more trouble you could run into trying to get this through with the IRS. That's not to say if you bought a parcel a couple of years ago, and the guidance I've gotten from CPAs has been, we'll accept them within 2 or 3 years.
Do you just have to file an amendment to your taxes to go back?
Correct. Yep. You would have to file an amendment. Yep.
1 year is best, or right away is best. But for someone listening that maybe bought a farm 2 or 3 years ago, it's worth having a conversation. Beyond that, you're probably missed the boat.
Yeah. I would definitely say get a hold of me and we can kind of walk through what it might look like. And there's some parameters that we would need to hit. If you have a farm that you bought 2 or 3 years ago, we would need to have a soil test from that time of purchase.
Okay.
So that's where some folks might get messed up, is if you don't have a soil test from that time. There's just unfortunately nothing I can do. So
okay. I mean, what are some of the benefits for someone doing this? Because right now someone's like, man, people get a little nervous when you say IRS and deduction, even though the code's written to utilize it. What's the purpose of doing it? Obviously, it's to save money and deduct income, but is it worthwhile from what you've seen?
A client purchases a parcel of land. Okay, auction environment, private treaty, however it's purchased. Okay, so you have the land in your possession. You'd get a hold of me, and you'd say, "Hey, I'd really like to look into the Section 180 depreciation." Say, "Great, okay." So there's kind of two ways we can go about it. If you have a soil test from the time of purchase, so let's say you bought a farm last October and you had it immediately soil tested in October, November, somewhere in there. You've done the most important thing already.
Right.
Okay. So you could provide that information to me and I would conduct the report from there. If you don't have a soil test, my company is that's how we started. We've been in business 40 years, soil testing for 40 years. And so that's really where our bread and butter is. So you would have my company come out, collect soil samples, do the analysis, and run the project from there. The next step would be determining how much excess fertility is out there. All right. And so depending on the state in which the parcel is, I would use that state's land grant university. So in Illinois, our land grant is the University of Illinois. So let's just talk Illinois for now. We can conduct these in any state, but let's just talk Illinois. So the University of Illinois has certain standards for crop production. Okay, how much nutrients they consider optimal for crop production. So based off the soil tests, I go in there and I say, okay, so your soil test is at this level. And based off of what the U of I says, you are above that optimal level by such and such amount. Okay. We take that excess amount, I assign a value to it based off of what the USDA says was the value of fertilizer at the time of purchase. And here's what's the really beautiful thing about this. I'm using quasi-governmental agency information, so the universities, backing it up with governmental information from the USDA. Okay, so in my mind, this makes these reports really bulletproof. So folks should feel very safe and comfortable about that. Okay, so we assign a value, and I send you the opinion of value report. You provide that to your CPA, and you're able to potentially, I have to speak in potential.
Yep.
Always provide that to your CPA, and you could potentially depreciate that amount.
The excess
off your taxes. Yes, exactly. Typically, most folks take this over 1 year. So you could really knock back your tax burden
for that year.
Exactly right. Yes.
Yeah. That's really impactful to be able to take a a deduction of that size. So when you do this math, is it on like a per acre basis of, you can use a standard, a deduction of $1,000 per acre based on the excess fertility? Is that how that looks? Or what is someone actually going to get in their hands when they see the report and talk to their CPA?
Yeah, absolutely. So the reports that I give, they do break things down into a per acre basis, as well as a total enterprise value, basically. I will say it is not hard based off, kind of normal soil tests. Say your farm's in average to good shape. It's not hard for me to find between $200 and $500 per acre in excess value. Think about like what I'm charging for my fee is just a drop in the hat compared to what the potential is for savings. And it's not unreasonable for me to find $800 to $1,000 an acre either.
What's the most you've ever found? I gotta ask.
I just did one the other day in northern Indiana. I've got it here. The gentleman had $1,100 in excess fertility value per acre. That was across, it was like a 32 acre farm. So the total came out to be $38,000. Wow.
And so to take that a step further, let's say someone's in a 30% tax bracket. And so 38,000 times 0.3. I mean, that's almost $12,000. Kind of like quote unquote in your pocket from the savings of deducting that off because it goes off. I assume this is deducting off your total adjustable gross income for the year.
That would be a good question for a CPA, but yes, generally that's how I understand it works. Yep.
So that's really impactful. That basically is an extra, $11,000 quote unquote in your pocket, deducting $38,000 for something. I'm sure it's different on the farm and location, everything else, but is there a rule of thumb of what a service like this costs on a per acre basis?
Yeah. So I do it pretty simply, really. If you have soil tests that are current and they kind of fall within those parameters that we discussed, I charge $10 per acre. Okay. If you need my company to do everything, come out, collect samples, and conduct the report from there, it's $20 per acre.
So yeah, when you're looking at a return of potentially $800 an acre or even $200 an acre, it's still such a minuscule cost in the grand scheme of things to get it done. Now, I assume, once again, I'm assuming this is all very new to me, so I'm just walking through this top of mind. So I assume with how expensive it is for inputs with fertilizer and things of that nature, that this is probably a really good time to do it in comparison to maybe what it was 10, 15 years ago.
Absolutely. So you have kind of two factors that play in here. Your soil test levels, so the amount of nutrients that are out there, and then the value of the fertilizer at the time of purchase. So last fall, when a lot of land sales were being made, as you know, it was not unheard of to see $950 a ton for a phosphorus product and $800 or $900 per ton for a potassium product. So the increased prices of the fertilizer really played into a lot of my clients depreciating a lot of money.
Yeah. Hope you guys enjoyed this. My name is Jake Hofer, and I'm a real estate agent out of the state of Illinois. And it's my goal to help 100 people buy their first farm. Been doing that with the Land Podcast and clips like this every single Thursday and Saturday that are released here on the channel. And to be one of those 100 people, all you have to do is, if you're in the state of Illinois and I can help you, I'd be happy to do so. Number two, if you want to get connected with someone that can help you, reach out and I'll be happy to get you in contact with an agent that I would personally do business with. And the last one is, if you just simply learn something from the content we're putting out or you get inspired to take action, I want to know, get you out of that spreadsheet. I'm on a mission to help 100 people. Until next time, see ya.